Hey, what's up, my buzzing bees? It's Stephen, and I'm a popular investor on the eToro platform. Welcome to everybody who's listening on YouTube and on eToro today. So, recently I've been doing many videos which I try as much as possible to help educate new investors that are coming into the space. I realize that it's a big jungle out there and it's very hard to get the information that you need. So I try in these videos to introduce some very key concepts, but in a very short and digestible way. Today, I'm going to be talking about a subject which I think is really important. I'm going to be talking about something called dollar cost averaging. And it's a concept that I've introduced to many of my copiers and followers in the past, but I thought it warranted the time today to discuss it a little bit further, because I think that dollar cost averaging is probably the best strategy there is in order to be able to become financially independent sooner. And it really kind of mixes and marries two things together. One is compound interest, so making more money over time as your investments go up. And second, dollar cost averaging, which means that you regularly put money into your investments on a regular basis in set intervals. So those set intervals can be weekly in some cases, or monthly, or even quarterly or half yearly. What is really important is really just setting a habit of investing very regularly. This is a similar approach to what a lot of you may have had in the traditional world, where you may have been contributing money to your pensions either through your company or you might have your own private pensions. So it's actually a similar concept. So what I actually suggest to people is find a time frame that really suits you. It might be when you get paid. It might be when you have some disposable income, such as a bonus, or you may have received money from elsewhere. So a really great way to be able to see how this will compound over time is to actually use a compound calculator. You can find many of these free on the internet. All you do is you just type in the lump sum amount of money that you want to invest, and then how much you can regularly contribute to your investments, and then your target of the percentage amount of money that you are looking to make. And then you will see over the long time frames, over 5, 10, 15 or 20 years, you will see that these investments become really significant. So why is dollar cost averaging the best approach, in my opinion? Well, I think what dollar cost averaging really does is it really tapers and stops the effect of timing the markets. So we all know that timing the markets is very futile. So it's very hard for me to be able to tell you what may happen in the market tomorrow or even next week. But I can tell you with a reasonable level of certainty, based on data over the last 50 years, that the stock market is going to probably compound at about 10% per year. There may be some years that are above this and some years that are below this, but this is the general average. But if you are to make an investment now and you are to put all of your money in an investment and you've already seen some quite significant gains, and then the stock market is to go down, then this can have some effects on your portfolio in the short term. However, if you put a reasonable amount of money invested at the beginning and then regularly add over the time, the timing aspect of your investment is dampened down over time. It is actually known that in the stock market that around 54% of the days are green. That means that the remaining 46% of the days in the stock market are red. So if you invest at a certain time in the year where there's been a lot more green days than red, then you may, in the short term, not get a very good average and the results may go down. However, if you have a long-term investment horizon and you regularly invest, then over the long term, over multiple years, you are going to get the average of the market. And this really helps to dampen the volatility of when things go up and when things go down, because you are investing at both times. So it's very important to note that dollar cost averaging, I think, is the best approach. I get a lot of people asking me on eToro, when is the best time to invest? Is now a good time to put money into my copy, or is now a good time to copy me in general? What I say is, don't try and time the copies, just like I say don't try and time the markets. Put an amount in that you think and you can afford to invest at the beginning, and then over time, as you get money from your salaries or lump sums of money, then you can invest that further in popular investors, indexes, or stocks, or whatever that may be. Because I think it's a very good saving technique. Instead of putting money under your pillow or putting it in the bank with very low interest, it's really great to build up the habit of saving to invest. Because let's face it, I think we are facing the world with a lot of temptations to spend our money on lattes, clothes we don't need, games, whatever it might be, whatever your vices may be. But if you just put a small amount of money each month or each quarter into your investments, you will see the effects of compound interest over time. And it may seem minuscule. You may think, oh, it's not really worth investing that amount of money. But you will realize that over time, that will compound. That being said, I know on eToro there are minimum limits on the amount of money that you can put into somebody's copy at any given time. So I understand that that can have some restrictions on the way that you do dollar cost averaging. But what I say in those situations is just expand your time horizon. So if you were previously planning on investing small amounts every month, then you just widen that time period and you make it every quarter or every 4 months or every 5 months, depending on your financial circumstances. The key concept is to invest over time and try to dampen the effects of timing the market. So that's all I wanted to say for today. That's a little bit of a guide into not only compound interest, but also dollar cost averaging. I hope it was helpful today, and please keep an eye out for future videos of mine. And if you have any comments, please feel free to leave them below. Thank you very much and have a nice weekend.